The US dollar is trading on the defensive heading into the North American session, with softer US data from last week continuing to reduce expectations for another near term Federal Reserve rate hike. The Australian dollar is leading the major currencies, while the euro briefly traded above 116 and dollar yen remains relatively contained. Sterling is also benefiting from the broader pullback in the greenback. Risk sentiment is steady rather than decisively positive. S&P 500 futures are up mildly, while NASDAQ futures are outperforming with a gain of roughly 0.5% as technology shares look to rebound. European indices are mostly modestly higher, although rising bond yields continue to place some constraint on risk appetite. The major economic development overnight came from China, where July activity data reinforced concerns about weak domestic demand. Industrial production grew 4.5% year over year, slowing from 5.3%, while retail sales rose just 0.6%, well below expectations. Fixed asset investment contracted more sharply, and new home prices remained under pressure, highlighting the continued drag from the property sector. Chinese officials partly attributed the weakness to extreme weather, but the broader picture still points to an uneven recovery dependent on exports and targeted policy support. The disappointing Chinese data have done little to hold back the Australian dollar. However, with Aussie dollar reaching fresh 2-month highs, the market might start to see some resistance. The currency continues to draw support from the RBA's relatively hawkish posture and the broader decline in the US dollar. Meanwhile, the yen's response remains restrained as Japan's weak GDP reading complicates expectations for further Bank of Japan tightening. Geopolitics continue to support commodities. Iran has reiterated that direct negotiations with the United States have not begun, keeping the diplomatic outlook uncertain and preserving a risk premium in energy markets. WTI crude is up about 0.5%, while gold has gained approximately 0.6%. Shipping activity through the Strait of Hormuz has also slowed, although a larger oil move would likely require evidence of a more serious and sustained supply disruption. Looking ahead, the U.S. calendar is relatively light, with the Empire State Manufacturing Survey the main domestic release. The more important regional event is Canadian CPI, which could generate volatility in the Canadian dollar and influence expectations for the Bank of Canada. Beyond today, attention will increasingly shift towards earnings for major U.S. retailers as a test of consumer health, while the broader macro focus remains on the Fed outlook ahead of Jackson Hole next week. That's all for now.